What if I told you you didn't have to win at 90% to be a profitable trader? What if I told you you didn't have to win at 80%? Would you believe that? What if I told you you didn't have to win at 70% to be profitable? Would you have hope? Hey, what if I told you you didn't have to win at 60% to be profitable? Would that give you more hope for your trading? Bet it does. Bet it does. Well, let's talk about risk management. Let's go deeper. Hey guys, how's it going? JD here. So this is a good training video I got set up for you guys here. I learned this from a Fibonacci trader named Curtis Cobain, and he's with the IM Academy. It's a kind of an investment school that you can go to online to learn about different things, different ways to trade. Mostly he's into Bitcoin. His nickname is I think it's Curtis Bitcoin Cobain or something like that. Cool guy, great, teaches great knowledge. So he's who I got this from. He gets the credit. I don't know where he got it from, so hey, he'll get the credit. But when he showed this to us, to me it was mind blowing. So I just want to show it to you because I do believe it's the best way to approach your risk management with trading. So I know it's a lot of stuff on the page here. Let's just focus in the center. We got a triangle here. We're gonna start at the top. So you start with the strategy. Arrow points down. We're looking for a 60% rate, one-on-one risk to reward. So, in the intro, I was like, what if I told you you don't have to win at 80% or 90% to be a profitable trader? I know that's out here. You hear that kind of stuff a lot, but I like stuff that's real. So here's the real deal. If you have what you need is a strategy that wins at least 60%. Well, you just need I'm not even saying that, but let's stick to that 60%. And you want a risk to reward ratio of a 1-to-1. So with pocket options, I'm kind of able to get this. Well, I'm able to get both of these actually, because now it's not a clear 1-to-1, because when I put up 1%, pocket option only pays out 92% of whatever I put up. So it's not all the way 1-to-1, but it's, since there's other things about binary options that I like, it's the closest that I'm going to get. So I live with it. That's why I only try to take opportunities that's at that 90%, 92% payout. It gets me as close to 1-to-1 as possible. So the next thing is just a strategy that wins at 60%. My strategy is basically, I'm a price action trader. The strategy is just to take price action setups, a few that I can just name as a breakout pullback. You guys see me win that all the time. Second entries, long or short, in a strong trend, every pullback. I'll take every pullback when it's a very strong trend. And other than that, just even in a healthy trend, I'll just take any pullback to the EMA. That's my strategy in a nutshell. Each of those trade setups, let's just say they ran from about 70, I would say 70 to 90%, somewhere in that range. Though if you was to take those setups with trend, you should be winning at 70, 90%, somewhere in there. Now this is account for you got a perfect signal candle, and the market conditions are perfect. So everything has to line up, don't get me wrong. But for the sake of argument for this demonstration, let's just say that those opportunities that I just mentioned can win at 70, 80, 90%, which they can. So 60% is doable, right? So we got a 60% rate that's doable, and we know we got the 1-to-1, pretty close to it. All right, so that's our strategy. Now let's move to the risk. The risk, 1% RPT, risk per trade. Only risk 1% per trade. A lot of people go wrong with this. I know I see people out here risking 5%, 10%. making 4,000 or 2,000, in 20 minutes. I know it's possible, but I also know that on the flip side to that, those bad days have to be horrible. Oh my gosh. And I just, to me, a lot of people go wrong because trading is a mental game, an emotional game. And so if you are risking more, if you're risking too much, let's not even talk about what percent, but if you're risking too much and you lose a trade, it's going to affect every other trade you take. You're going to skip wins because you're scared. You're going to skip wins because you're fearful, because you're not comfortable losing, 5% in one pop. You lose 2 trades, you're down 10% of your account. It's going to be real hard to dig back out of that hole. But what I found is with 1%, it's just like you risk 1%. I don't care what your account size is. You lose 1%. Oh, well, I lost 1%, right? It's not the end of the world. I can come back on the very next trade nearly, other than the small 8% that you lose from taking a trade. Just consider that commission or fee or whatever. You got to pay those whatever you're trading. But I mean, again, 1%, I lose that. Whoop-de-doo. I lose 2 trades in a row. Oh well, It's not the end of the world. I'm only down 2%. I go on a nice 4 trade win streak. I still had a great day. So 1% is how I like to do it. Everybody can do what you want. But for just this example, let's just stick to 1% so you can see the power. So then we got frequency, right? Frequency is just how many trades you're going to take. I use a 1 minute chart, so I can take a gang of trades in a day, actually. But let's just say you took 60 trades in a month, just for this example, okay? So we got our strategy. We're trying to win at 60%. We got a 1-to-1. We're only risking 1% per trade, and we're going to try to take 60 trades. Let's see what will happen just based on the numbers. So here's our equation over here in this box, okay? This is the equation to remember. So we got the frequency times the strategy will give us our wins. So if we take 60 trades right here and we win at 60%, 60 times this 60%, that's 36 wins. Okay, so we got 36 wins. So now F minus W, so we got the frequency minus those wins. So the frequency is still 60. We took 60 trades. We won 36 of them. All right, that's going to give us our losses, which is 24. So then we got our wins minus losses. That's going to equal your profitable trades, right? So we had 36 wins minus 24 losses gave us 12, right? So 12 profitable trades, right? So those 12 trades times the 1% that you risked equals 12%. Okay. So in a month's time, now we're right here. In a month's time, 12% of your account. So whatever you start with in a month, you had 12%. In 12 months, right? That's 144% of your account. Okay. That means you doubled the account and some. That's just at 1%, trying to win at 60%. There you have it. You can make money. You can make money just winning at 60%. Not only can you make money, you're making good money. How many people are getting 144% on their investments in a year with money sitting in their bank or money sitting in a savings account or a high interest savings account? Regardless, you're not getting 144% on that money. How many people are in the stock market getting 140% on their investment? How many people have money in hedge funds or that are getting 144% return on their money every year? Okay, so this number is ridiculous. It's huge. Let's not be greedy here, okay? That's a huge number. If you were to do that with a $10,000 account, you started with 10 grand and made 144% of it in a year, be happy with that. But that's just for this example. You can raise this number 3 different ways: win over 60%, risk 2%, or take more trades. Pick your poison. Or really none of them are poison. So if you just take more trades, you could possibly make more money. If you were to take more trades and win at 70%, oh goodness gracious. Just the thought of it just make the hair stand up on the back of my neck. Anybody else feel that? Just taking more trades, winning at 60. Let's just win at 65%. Oh my goodness. I guess I could play with the numbers. I'll let you guys do the math. I'm just saying, it's possible, so listen, you're playing a game that most people lose at. Luckily, I didn't want to sound too boastful. I was gonna say, luckily you found me. I'm just gonna be honest. That's what I was gonna say. But luckily, I'm here to be able to share this information. I hope it helps, and I hope it gives you the confidence to understand that if you play the game the right way, play it the smart way, and run with the smart money, then it's possible. It is possible for you to make money starting from any account size. Just find a strategy that wins at least 60%. Have yourself a 1-to-1 risk to reward ratio. Risk 1% per trade, and take as many setups as you can find that fits your strategy. And if I just switch this to 2%, if we just go to 2%, that's 288% a year. Tell me where else you can compound your money like that. So you can make money in the markets. You definitely can make money with pocket options. Pocket options plus price action traded equals this result right now from what I've been seeing. So from my results, so it's doable. I hope this video helps. This is risk management at its finest right here. Study this and realize, and I hope that if you've been losing or if you've been struggling, I hope this makes your day to know that it can be done. And not only can it be done, you can do it simply by learning how to read the price charts. You could just take one trade. You guys see how often I win the breakout pullback, right? If I just took that trade every day, only that trade, and risk 2% on it, I would make it to these numbers because I would be winning at 80% easy. So just find a trade that works, find a setup that works, and work that setup. So I hope you've enjoyed this video. Again, my name is JD, and as always, I wish you increase on the Sutton. Bye-bye.